Hi everyone, Maria Sarmiento with Team SP at Keller Williams Realty. So today we're actually going to cover some information about what the average home buyer mistakes and what they do. And so there's 12 first-time home buyer mistakes and how to avoid them basically. So we're going to start with a couple key points. So let's get started with the first one. The first one is not really figuring out how much house you can actually afford, and what ends up happening is you will end up looking at homes that may be out of your budget or your comfort zone. And so sometimes it's a very good idea to aim a little lower to have a very comfortable payment so that you're not up at night very stressed out thinking of how you're gonna pay that mortgage. So really is figuring out how much home can you possibly afford is key point number one. Number two is actually getting just one quote. Most people will go with the first person that we recommend, and we typically always recommend 3 lenders. And the reason for that is shopping for a mortgage is definitely like shopping for a car. You want to make sure that you see and compare what offers are out there for you and what the lenders are willing to do. Mortgage interest rates may very much vary per se, and so of course you want to know what kind of discount points you may be entitled to, what kind of closing cost fees, and what kind of interest you're gonna get. So that's number 2, getting just one rate. Make sure you get more than one opinion on your rate. Option number 3 is actually not checking your credit report or correcting some of the errors in your credit report. This is kind of very unique situation. We always get home buyers that say we're ready to buy, and they may say, but we're considering waiting perhaps as well. So there's all the people who are ready to, run to go find the right home, and then there's the people that say we're gonna wait. No matter where you are at, this is why number 3 is so important. You are never too early enough to check your credit report and correct some errors. And I tell people it's like a roadmap. So if you get to checking your credit score ahead of time, the idea is that you are going to know what's on it first. And if there's any issues that may arise, it would be a perfect idea to try to make those corrections so that you can improve your FICO score a little higher, so you're able to obtain a better rate down the road. So again, checking your credit report is crucial. Even if you're not quite ready, it's never too early to start planning. So planning ahead, looking at that credit report, what's on it, and how you're going to tackle down some debt is going to be a really good important point. So number 4 is actually not making a down payment that's too small. What tends to happen is most people think they need an average of 20% down to purchase a home, but what happens is that's a conventional loan. There's other programs out there for home buying that may be 0 to 3.5% down, which are more enticing in the front end for you to get into this property. But what tends to happen is homeowners occasionally have some regrets about this down the road, that they should have invested a little bit more up front for the greater cost of having a lower payment down the road. So securing that, having a down payment that's large obviously helps. But again, as long as your monthly mortgage payment is comfortable, it's what really is going to matter. So moving on, number 5, that's actually not looking for first-time homebuyer programs. And this is where, again, we go back to providing you with 3 lenders that we have had or established a relationship with that may be able to help to look at some of these first-time homebuyer programs. Some of them may be that they can save you some money up in closing costs. Some can save you some money in the down payment. It just really varies on this. So obviously don't make an error assuming that you have any delays of home ownership because you need such a large down payment, which may not be the case. So again, continuing from item number 5, which we talked about most buyers not looking for first-time home buyer programs, this is where you definitely want to connect with a lender that's familiar in the neighborhood that you're looking for the property. And the reason for that is they're going to be much more aware of what kind of first-time home buyer programs may be out there for you that you can take advantage. There is about some statistics that 11% of millennials will say that they are regretful of not having researched this enough in terms of what kind of programs are out there for them to have purchased the property. So definitely there's still a vast majority that don't express such regret, but we definitely want to make sure that you do not have this regret and that you are looking at every option out there for your next step in home ownership. So moving along is number 6, and that kind of goes with a first-time buyer program, is most people ignore a couple loans, which we've got is a USDA loan, which is typically used in a less populated neighborhood further out from the suburbs, and those are the areas that will qualify for a USDA type of loan. So I would say if you want more information on that, we can provide that, but we're talking about a loan that may be 1 to 0% down with some slight PMI, which is property mortgage insurance, is slightly lower. And that's kind of an advantage, very similar to the VA program. And then of course you've got your FHA loan programs for first-time home buyers. So make sure you look into those programs so that you see what benefits you may receive from that. So moving along is number 7, not knowing that you are able to pay some discount points to bring down your interest rates. So what that means is if we've got a rate at a 3% on average right now, and you're able to get a comfortable payment if the rate was closer to 2.75, that quarter percentage you're able to discount at a price. So you're able to come in with some sort of fee to be able to do that, which this is something the lender will dive deep into, but this rate savings can ultimately save you some big bucks in the monthly payment a month. Number 8, which is emptying your savings. A lot of first-time home buyers will do this, and this is actually not the ideal situation. And the reason is, as you all know, I'm assuming, is that buying a home takes a lot of possible unexpected expenses that will come up. For example, if your water heater broke and you did not have any funds to fix this, you've now drained all your savings into this property when you originally purchased and have no reserves. So one of the most important things is always keep a little buffer of some money on the side to make sure that you have some money for the what if situations that may happen the first year of home ownership. So do not empty your savings, which goes back to definitely keeping some numbers in the low side in terms of your mortgage and down, if possible, a little bit to adjust for the what if situations that may happen the first year of home ownership. So number 9 is applying for credit before the sale is final. So when you apply for a credit before the sale is final, a few weeks later you close and you finalize everything in the home, you get your keys, you're very excited, and then you realize that you want to leave your credit alone for as much as possible, because you do not want to go get a new credit card to buy furniture for the house, appliances, or take out an auto loan before your mortgage closes. So definitely you do not want to apply for any credit cards whatsoever or any debt you want to encounter while you're going through the process of purchasing a home. So you want to make sure you're very much focused on just the home for that period of time. So number 10 is actually shopping for a house before the mortgage. This happens often. We get really excited about the possibilities of new home ownership, and we want to get out there and look at some homes, and it is just as exciting for us to take you to start looking at some of these properties. However, you got to be very careful that you are not shopping for the house prior to knowing your numbers. Very important to know where you're comfortable, and so that you know you're not shooting or aiming too high or too low into where your best fit for this new home will be. So finding the right home is obviously really important, but it's also just as important to be locked into or committed to a mortgage lender prior to picking that home. That's really important. And okay, so number 11 is underestimating the cost of home ownership. After you buy a home, you start to get some bills and you start to get some things. Just the fact of the bills, to start with utilities, you got to keep in mind that there is, in every utility, new utility bill you create or open, there will be some sort of upfront cost. So a lot of people miscalculate these costs. If you're a new homeowner, you're definitely going to have very little established credit in terms of utility bills. So these securities deposits may be a little larger. So after you buy your whole new home, the bills start to rack up a little bit and they come to you as a surprise. So always telling you back to savings, keep some savings in the bank so this can help, and it would offset some of this cost. So underestimating the cost of home ownership, one of the key points is that if you've been renting for quite a bit of time, you will actually completely forget, in essence, that there is a little bit more overhead when you own a home. And for example, if you're currently renting in an apartment, more than likely you recall that you do not pay a water bill. So for example, the water bill will now be covered by you, so that utility bill may be a little bit more expensive. In order to estimate some of these unexpected quote unquote fees that may come after the mortgage, a really good thing to do is that you request from the realtor prior to closing your transaction an average of 3 months utility bills, so that you know the history of the utility bills in this household. That's going to be very helpful to understand where your utility bills may be at that time. So moving along, the last one is miscalculating repairs and renovations. This one's kind of unique. Obviously, you're walking into a new property, you are new homeowners and don't know what to expect. And a lot of buyers make a few mistakes with underestimating the repair cost of some of these properties, and therefore they realize that some of the numbers they thought were going to be to fix certain things may be an unrealistic number. And of course, the reality of these renovations is that they appear to look faster or cheaper and easier in the real world, but the reality is that it is not. So you definitely want to make sure you do not miscalculate any repairs, and that you definitely check 2 to 3 bids per any job, as small or big as a job may intake to do, that you obtain 2 to 3 bids minimum prior to committing to a contractor or a handyman. So that's really important. So I hope these points helped a little bit. Obviously, I know it's a lot of information when you're buying, but these are some of the 12 mistakes we see home buyers making prior to starting to purchase the home. So please make sure to look out for it and listen to this video so that you guys are prepared on how to avoid these mistakes. Thanks for tuning in.